Alibaba showed once again in their Q3 2025 earnings that it was actually a very strong growth company with e-commerce and with the cloud. I'm Eddie for Cloud Farman, and in this video, we are going to review their Q3 2025 earnings and what it means for the future of Alibaba. So let's get started. Okay, so let's start with a review of the top line for Alibaba and what they reported in their September result. So basically, if we look at the reporting number and especially the restated ones in terms of revenue, so Alibaba grew revenue by more than 15%, which is actually pretty great given the circumstances in China. So this really shows that Alibaba is actually really a growth company. And in terms of how does it decompose, I would say in terms of segments. So we have seen that the China e-commerce group grew by more than 16%, and the cloud business grew by more than 34%. And actually the disappointment was actually in the international e-commerce, where we have seen only 10% growth year on year for Alibaba and their subsidiaries, so AliExpress and Trendyol, for example. So definitely, so this result shows that Alibaba is now back into growth mode in terms of China e-commerce and in terms of cloud business. So this is actually a pretty good result, and actually initially the market really appreciated very well this result, and this shows actually a lot of potential and optionality. We are going to see that Alibaba is going to continue on this very strong momentum. First of all, let's review the China e-commerce segment for Alibaba and in this quarter. So we are seeing that overall, so this China e-commerce segment grew by 16% year on year in this quarter. And actually, like the Taobao segment, which actually is the main actually revenue drivers for this segment, grew by around 9 to 10%. And so this is actually pretty good, and this actually compares a little bit slower than JD.com. And actually, if we look at China e-commerce for Alibaba, it's actually very comparable to JD.com, because JD.com grew their revenue by 15%. Here we are seeing China e-commerce grew by 16% for Alibaba, and driven by their Taobao platform, so growing with their CMR, with their customer management revenue by 10%, which is actually pretty good. And in terms of first-party sales, so we have seen that the growth is a bit slower at 5%, but overall, so this Taobao platform, so China e-commerce, excluding the quick commerce, is growing by 9%. And actually, most of the revenue growth is coming from their new instant commerce. So it's not the same as in terms of profitability. In terms of profit, we are going to see that afterwards. But this new instant commerce or quick commerce, so basically like the new business that Alibaba has invested a lot to actually get into and compete with Meituan and JD.com, is actually growing by 60%. And this really shows that this is a new avenue for e-commerce in China. This is the future of e-commerce in China, definitely. It's actually a very good also way to cross-sell and upsell into the Taobao platform. And this really shows that this business is actually growing pretty fast. So in China, but also for Alibaba. So overall, the China e-commerce numbers for Alibaba were pretty strong, as we say, like plus 16% in terms of growth of revenue. And it shows that the consumption actually in China is coming back, and we are seeing consumers spending more and more. And actually, Alibaba is very well positioned. So with their Taobao platform, with their Tmall platform, but also with this instant commerce. And we have seen lately also that they reorganized and they shifted the way they were approaching, their e-commerce application. So basically now they are rebranding everything around Taobao. So Ele.me is actually becoming more integrated into the Taobao app. And so this really shows that the strategy of Alibaba is becoming more and more consistent and is becoming clearer and more integrated. And I think that this is really great. And this is really showing like the vision of the management to really put all efforts and try to create a lot of synergies between all the different parts in their China e-commerce business. So I think that just for this business, it's very comparable to JD.com. I think that it is still growing pretty well and is going to benefit tremendously from the coming back of the economy in China. Then a quick word on the international e-commerce for Alibaba. So actually Alibaba was pretty strong domestically in China, but I would say that the growth in international e-commerce has actually disappointed a lot of investors, so growing by only 10%. This is actually like the only bad point in this on this quarter for Alibaba, but we hope that in the next quarter they're still going to be able to continue to expand their e-commerce business outside of China. But I think that today this is not the main focus for the management. I really think that the main focus is China e-commerce and AI and Alibaba Cloud. And so that's why I think that today there are not that much investment behind the e-commerce. And this is not the future, actually, or the short-term future for Alibaba. So I think that even though it is disappointing, this is not the main point of concern and the main point of attention, even for investors. Then let's move on to the crown jewel of Alibaba. And this is what we discussed in our previous videos around Alibaba. This is the cloud business. And they are showing that the cloud business is not only a leader in the China market, but is actually growing very, very fast. So we are seeing that AliCloud is growing by 34% year on year in this quarter, which is actually on par with Google or Microsoft. Obviously, the base is much smaller, but this really shows that there is a lot of demand for cloud infrastructures, but also for AI infrastructures. And this is where actually Alibaba is shining, because in terms of capabilities, they are also highlighting on this slide that they have the full stack capabilities and providing basically the whole AI infrastructures for a lot of different Chinese companies. But not only China, what we can see that they are going to expand actually internationally. They are building data centers in South Korea, they're building data centers in Malaysia, so in Southeast Asia. And so definitely they are going to expand, and they are going to be very strong alternatives to American hyperscalers. So definitely, so what we are going to see going forward, and this is what this Q3 2025 earnings is actually showing, is that definitely Alibaba is going to continue to dominate in terms of cloud, and they're going to be part of the new infrastructures in terms of AI in China and in Southeast Asia. This is going to be a very profitable business for Alibaba, and they are going to continue to grow. And what they mentioned in their latest earnings call is that they anticipate that the growth is going to continue to accelerate, because they are showing a lot of demand, very similarly to Amazon, Meta, Google, and Microsoft. The AI demand is tremendous. There is no slowing down in terms of demand, and a lot of companies are trying to leverage these AI tools. And Alibaba is going to benefit in the same way the hyperscalers are going to benefit, and we are going to see a lot of cash flow coming out of that. And also, one thing which is great is that AliCloud is actually not as demanding in terms of AI investment as what we are going to see in the US. Basically, Joe Tsai in an interview at Hong Kong University also mentioned that it's much cheaper to build data centers so in China, so 60% cheaper, as you said. Also, the cost of electricity in China is much lower. So all of that showing us that Alibaba is going to be able to replicate this type of AI infrastructure in China, but for a much smaller fraction of the cost. And on top of that, so developing the model is also much cheaper in China. So we have seen that China has put a lot of effort and a lot of emphasis in terms of having much more cost-efficient models. So we have seen that with DeepSeek, we have seen that with Kimi, but also we are seeing that with the Qwen models for Alibaba. And definitely, I think that a lot of companies are going to use the Qwen models on Alibaba infrastructures, and that's where Alibaba is going to win. And this has been highlighted as well by Joe Tsai. So the AI strategy for Alibaba is pretty simple. They are going to develop state-of-the-art models, and they hope that companies are going to run this AI on Alibaba infrastructures. And this is actually showing in the market share for Alibaba, so around 36%, so 35.8% market share today, so in China. So this really shows that they are the AI leader in China, and they're going to be the AI leader in Southeast Asia. How does all of this revenue growth is actually translating financially? So we have seen that the revenue, the revenue reported growth is about 5%, but if we restate it from the SunArt actually sale last year, so the revenue growth is about 15%. But what we are seeing is that the earnings from Alibaba actually decreased pretty significantly, especially due to their investment in AI, but also in the instant commerce. So I think that this was spooked the market a little bit, because basically their earnings and their EPS actually dropped by more than 50%, so minus 52%, as we can see here. And so this really shows that Alibaba is in investment mode, and the ROI is not actually 100% clear today on both the instant commerce and the AI part. But what we are seeing materializing in the figures is that, well, the AI demand is actually incredible, and Alibaba is definitely going to see some ROI on this AI spend. Why? Because they have the cloud and they have their e-commerce business, and AI is going to definitely benefit them on both sides. They're going to be much more efficient selling advertising and selling merchant services on the e-commerce platform, and they're going to be obviously benefiting tremendously by people using AI in China. So that's one thing. Then on the other then on the other side, so on the quick commerce or instant commerce, so the ROI is not here today, but we have seen like the growth of this instant commerce business, so plus 60%. And this is definitely the future of e-commerce so in China. So Alibaba, JD.com, they have to invest in that. They have to, because otherwise they might be disintermediated by other players. But definitely we are going to see a lot more people using this instant commerce, and this is going to grow the business for Alibaba in the same way that Amazon has been able to grow in different verticals in terms of commerce, so in the US. So definitely there is going to be ROI. So all the investment that we are seeing with Alibaba today are going to pay off. Or what this is my opinion, this is what I'm seeing also in the figures, so in this quarter. And going forward, I think that the business of Alibaba on both e-commerce and the cloud is pretty strong, and they have a pretty strong actually proposition today, even financially. So I think that you should not be too spooked by these earnings, because obviously, like, we would like Alibaba to be much more profitable than that, but we are going to see that in the future that they're going to benefit tremendously by all these investments. And in terms of actually free cash flow, so obviously, so all this investment has actually impacted the free cash flow tremendously. So today, what we are seeing is that Alibaba is free cash flow negative, which is not really great. So minus 3 billion US dollars on these quarters. And in terms of share repurchases, so they have not repurchased actually a significant amount of shares, given that the stock price today has actually come back to a, I think, like pretty fair level as of today. But definitely, so Alibaba today is in investment mode, and we should not expect profitability and strong free cash flow at the moment. Okay, so Alibaba stock price is today around $155. So this is not financial advice, but what we can expect from Alibaba going forward. So in my opinion, I think that Alibaba is still a pretty strong company and pretty strong opportunity in the market. Not as good as what it was when it was below $100, that's for sure. But on the other side, like today, we are seeing that Alibaba is really the leader in terms of AI in China, and they have very similar characteristic to Google, for example. And so I think that today we have more confidence with Alibaba that they are going to be able to dominate, and they're going to be able to leverage AI, and they're going also to benefit from the resurgence of consumption in China. So I think that we have more information today, so that's why also that the stock price is actually much higher than what it was before. But I think that there's still a huge runway for Alibaba to become even more profitable and to benefit even more from AI, especially on the cloud business. I think that in the next quarters, we are going to see a continued acceleration on the cloud business, because the AI demand in China is tremendous, and also in Southeast Asia. And definitely, I think that this is going to surprise a lot of people. And I think that Alibaba is going to be one of the fastest growing cloud providers or hyperscalers so in the world. So I think that they're going to grow much faster than Google, than Microsoft and Amazon. And that people are going to notice that, and they're going to see that, yes, AI can also be profitable in China. And I think that a lot of investors are going to be much more interested in Alibaba going forward, when they're going to realize that AI is also true so in China, and that Alibaba is actually as good as an opportunity as what we are seeing today with Google or Meta, for example. So definitely, Alibaba is still a great opportunity. I would say that at this level, so the downside is not as protected as what it was before, but the upside is much more important today. Definitely, Alibaba is going to be a leader in the next 10 years in terms of AI. And I think that, well, every investors, I would say global investors who are interested in terms of AI should have Alibaba in their portfolio in the same way that they should have Google, Meta, or Amazon, for example. So Alibaba is the future of China. There is no doubt about that. And that's why I think this is a great opportunity. To which extent it should actually be in your portfolio if you're interested in Chinese stock, I think that this is maybe a little bit more complicated to decide. But I think that you should not bet against the future, and the fact that Alibaba is going to be the future of AI and the future of the new technology in China, I think that it's a pretty great opportunity. So if you're interested in other analysis like this one, please check my other videos, please subscribe, and I'll see you in another one. Bye.